Welcome to Trading Lounge and the S&P 500 for the 2nd of July. So let's go over a few things. We've got a impulse wave to the upside here. So we can label this wave 1, and we know we've got 5 waves in this sequence here. So after 5 waves, we get a correction of an ABC, and then we get another 5 waves. So we are looking at this in terms of the A wave here, an A and a B and a C wave here, and then 5 waves down here. There should be some sort of equality between wave C and wave A here, and then we can see a move back up through here. Now, it's a bit of a rock and a hard place we're in at the moment. We are currently long in this area through here, and we'll be looking at that and where we can move our stops and things. Now, the second thing here is that could this particular market here be counted in different ways here? Possibly, and one of the ones that I was looking at for that was this particular count here. It's a bit of a long shot. When we have wave 1 here and 2 here, and 1 and 2 and 3 and 4 here. Now this is how we're counting some of the stocks on the NASDAQ. So this is quite possible here. And one of the things here that we need to talk about a little bit is that it's quite clear that we've got 5 waves here for this. Now, the other point here is that these tops here, on the futures market, this is the top. On the cash market, this is the top. Now, if this is the top on the cash market, then we could count this down as 1 and 2 here and 3 here and 4 here and 5 here for this. So if that's the case, we could include this as the A wave here, the B wave here, and 5 waves down for the C wave here for wave 4, or even wave 2, that intermediate wave 2. Doesn't really matter at this stage. And then we need to be counting to the upside here. Now I can count 5 waves up here so far for the futures market, but the cash market still needs to move a little bit higher, but we'll move into that. So there's different ways that this could be counted here. Now, well, let's just go in and have a look again. So from the daily chart here, this has been our primary count here. So we'll kind of stay with this a little bit. But if there is 5 waves in here, I mean, is it possible to have this wave 2 sitting here? So we have an A and a B and a C for wave 2 here. I don't know, it's a bit of a long shot for that, but it's possible. But we certainly need this to play out first. So what we actually need to see here is that if this is the A wave here, then an A and a B and a C wave. I'll show you how that counts in a minute. But this move here would be in 5 waves here, and it would pull back up roughly to any of these highs here. But one of the things that I also need to point out while we're here as well is that from this high here to this A wave low here, just pop that in there, 61.8% is right where we are now, where all those open and closes are here. I can count 5 waves up here in the market. The first initial bit doesn't count very well, but it counts clear on the cash market, so we can look at both of those. But yeah, just to point out that, that's technically where wave B should be sitting, on that 61.8% mark there. So it's possible to have that high in here. So we obviously need to gather some evidence for that, and we'll look at all of this a little bit closer here. So we've got a few things to consider here. We can look at this move here in 5 waves. Sure, maybe go a touch higher on the cash or whatever, and then move down from that point there. Or if it's going to be bullish and we've got 5 waves up here, that will move down and have a 3-wave move back and then move up here again, and continue to move up. So in both cases, we don't want to miss too much of anything. So let's go in and have a closer look here. So on the what I just talked about then, this is the 4-hour chart here. We've got a clear 5 waves down here, so we can look at this here. If we look at it on the futures market, we can, the cash market, we can look at this. It's an A wave, a B wave, and a C wave here, because that's the high on the cash market. And we can look at this as 1, 2, 3, 4, 5 here for this. Then we can count 5 waves up here. We would look for a 50-60% move back into this space here. I think it's just important to look at all of these. So that's all we're doing at the moment. And then we just need to come up with strategies for this. So it's possible for this to have a 3-wave correction here and then move up higher from that point. As I mentioned, this is the 61.8% from the top to the bottom here. So it's also possible that this can just continue to the downside at that point there. So we need to be mindful of that. We're in a bit of a rock and a hard place here at the moment with this. So let's go in a little bit further here and look at the 1-hour chart. This is the other way to count it here. So we know the futures market, this has got the high here. So we could look at this as 5 waves down here, and then an A wave, a nice B wave here, and a nice C wave here for wave A. And that fits quite nicely, really. And then the B wave here also has 3 waves here as well in this instance here. So it's fitting quite nicely here as well. And then what we were doing is we were tracking 5 waves up through here for this. So I might go to the 15-minute chart here for this. We've got extra trades in here as well. But in a nutshell, we can count 1, 2, 3, 4, 5 here. And we're at the 61 in this box here. We're at the 61.8% retracement level. So it can, can break down from this point here. We need to, see it really break down from that point though. And I want to show you the cash market on that too. So on the 15-minute chart here, just pulling that section apart here a little bit. Sorry, I've just got my drawings over here. Don't need, just clean this up a little bit while I'm here. So one of the things down here in this first instance here, this is a little bit messy in here for this if you've tried to count this on the futures market here. I've kind of figuring this is wave 1 here and 2 here and 3 here and 4 here and then 5 waves up here for wave 1 here. I know that it can be counted differently. We could build here from this point here, have wave 1 here and expanded flat for wave 2 here, and then have a series of moves up of 1s and 2s up here further. But I'm just going to stay with this. I want to keep it simple here for a moment. But for wave 2 being here, then we've got 1 and 2 here and 3 and 4 here and 5 here for wave 3, ABC for wave 4. That becomes a bit clearer on the tick chart. And then we've got wave 5 here. Wave 5 doesn't finish off very well, and we'll need to see that on the tick chart, but we are getting an impulse wave to the downside here. We do have trades in here, here, and here. So we're going to put the stop just above the last position here in this, and we'll probably be stopped out with this. The other point I want to make is just to have a look at this structure here on the cash market. So just bear with me a second. This will be a 5-minute chart, and you can see how clean it is on the cash market. There's no mess down the bottom here and so on with all of this. So So to me, this doesn't feel quite finished to the upside just yet here for all of this. And the reason I say it, we can count like 1 and 2 and 3 and 4 and 5 to this point here. And this has got 5 waves in it to this point here, but we've still got these highs here. So we can't count this as 1, 2, 3, 4, 5. We can't do that here. So we could count, there's different ways we can count it. We could count it as wave 1 here and 2 here, and then wave 1 and 2 and 3 and 4 and 5 moving up through there. It probably counts better with wave 1 sitting here and wave 2 sitting here, and then 1 and 2 and 3 and 4 and 5 up here for the third wave, back for the fourth wave, and then we still need 1 and 2 and 3 and 4 and 5. We still need a little bit more on the cash market. What I'm saying here is that anyway, either way I look at it on the cash market, it's not completed to the upside. So that sort of bothers me a little bit. So just bear that in mind, but we can take something from that particular chart there. The other thing that I want to have a look at here is pretty much strategy next. So when we're looking at well, we've got 3,000 here, which is the major trading level, and then we've got the minor levels. So the minor levels are these three here, 1, 2, and 3 here. They make up group 1 here, and with group 1 here, this is all minor group 1, 1, 2, and 3 here, minor group 1. If we get support on top of this one up here, the 300, then we're going to be leaving this number over here. Now, obviously, that's a long way away, and it doesn't really help us in this instance here, but we're dealing with just the first minor level here. But from the first minor level here, then we can break the problem down into sub-levels. So we know that above 100, we've got 10, 20, and 30. So that's also group 1, that's subgroup 1 here. If we get support on subgroup 1 here, a little classic trading levels pattern here, which is this pattern here, which is the arrival, the reaction, the first high above the level, a correction here, and if it gets support back up here, we can go long here and add on any of these highs here. So that's that. So we need to see that. If this market continues up, let's just say that for whatever reasons, the market continues up. If you get a classic trading levels pattern at 31.30, then you need to be building long there. And then you can also look to do the same thing on the midpoint here, the next level, because the Fibonacci numbers would run as 1, 2, and 3, and 5, and then 8 here. And then we get back to the next minor level 2 here. So getting support on this level here separates the market being pulled back to this number here, because while we're working with this 100 here, we've got 10, 20, and 30 here. And then below that, we've got 80, 72, and 65. So subgroup 2 and subgroup 1 here. This is the range that the market will vibrate in while it's working with this here. So technically, if this top here finds the support, then it's finished with this number and it will continue higher. If this level down here becomes the resistance, then it's finished with this number to the downside and it will move lower from that point. So that's going to help us with our short trades. But in this space here, this is the danger zone in here. And also too, if we consider the 3-1 here as the level, then we can also look for a classic trading levels pattern here as well. So we have the arrival, the reaction, the first high above the level, and then we have this move here, comes below the level, and then comes back up here. If it gets back up here, well, then we can go long from that point. But this first high here, that's incredibly important. We can go long above that. We can go long above the second high. And if it gets support over here, then fine. Sometimes it comes up and retests this here and then fails and drops down. That's why, that's why it's important to get that support there. And it's just a process. So it's just basically a continuation pattern, and it's migrating from being resistance over here to support over here. And what you're doing in terms of trading is getting out here, saving yourself a lot of emotional stress here, and getting back in over here and moving off. So on the 3,100 level, we can look at that in this regard here. We can look at this as the arrival here, the reaction in 3 waves here, the first high above the level here, and then the A, the B, and the C coming back down to this point here. Now, it can move up from that point and, move up from that point. If it's going to do that, then it will do a pattern like this here. So the arrival, the reaction, and then eventually find support on top of 3-1 and move on from that point. But it could also, in this case, because we've got this B wave sitting here, we could also see failure at this point. So after 3 moves down here, we could retest this here and then drop below group 2 here and continue down through here. So this will tell you at this point, do we go long from that point or do we go short from under group 2 here? The other point here too, if this moves down in 3 waves here, then anything under 3 waves will be an impulse wave and you can move down from that point there as well. So it looks a little bit messy, but in a way, the classic trading levels pattern here will be the arrival, the reaction in 3 waves, the first high above the level, the ABC pattern here, and then we look for it to get back up on support here. And if you can see it visually on support, you can build in here, 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 and here, and move up from that point. Otherwise, we're going to see group 2 here become the resistance, and we'll move down from that point. So that's really about it from that point there. In terms of looking at this little top here in the tick chart, I just need to look at that with you guys here, because I can count the move up here in a couple of different ways. But my main thing is from the low here, all this here is actually part of this trend. It's not left over from the downtrend coming in down through here. We can already count 5, 1, 2, 3, 4 and 1, 2, 3, 4, 5. We can count that here already. So that's the low that we're working off. So whichever way you want to use that, that's fine. But I think the best way is 1 and 2 and 3 and 4 and 5 for the green wave 1 here and back for wave 2 here. Then it opens up for a nice third wave here on the tick chart here. And you can see the fourth wave play out much nicer here, pulling back to the fourth wave of 1 lesser degree here and not overlapping wave 1 here. The problem comes in with this little section here now. So we can count 5 waves up to this point, right, from here to here. So we've got 5 waves in here. But then we've got this, and then we've got this, and then we've got this here, which is overlapping here. So there's 2 ways I can look at this here, and I don't know which one is right. First of all, we could have this one here as wave 1 here and 2 here, and then wave 3 here, and then wave 4 here, and then wave 5 here. Now it seems a little bit odd, but it actually fits with Elliott because this 5th wave is smaller than the 3rd wave, and then wave 1's got the extension in it. So it's possible that the market can top out like that. And you can see that this market here is rather impulsive, like it's impulsing to the downside in an impulse wave here. Whichever way you want to look at that, I'll need to pull it apart. I can see some of it, but I'll need to go to a 20 tick chart. But we can see wave 1 and 2 here. And I don't know if that's, I need to pull that apart. I can see that that's corrective, and I can see that that's impulsive, and I can see the whole thing, this is why we need to move out of the market at this point here. So not quite sure how that finishes here. The other point here, it can be, we can have this up here as wave 5 or even another wave 3 based on the cash market, and have this as an A wave here, an A and a B and a C for the B wave here, and a C wave coming back down below this level here for this, down below the 3,100, or down to it at least, down past the A wave here, and then move up from that point. But if that's the case, if it comes down here and then the 3, we know that 3,130 here, the top of subgroup 1, if that becomes a support, to go long from that point. But because this has dropped so far now, you could also do the same at 3120 here as well. And even if this comes down below here, then you could also move back in over here. If you see strength above the 3-1, then you can look to move in on tested support on all these levels here. Otherwise, we need to just really allow it to, if you want to short it, you need to put the stop above here for the time being. But like I said, in between these levels here, this is 3-1, so we've got group 1 above and group 2 below here. This is the danger zone here. You don't want to go losing money in this unless you've got a good setup here. So support on top of this one here, that takes us to the upside. This as resistance takes us to the downside here. And normally I work with the 72 here is the backbone within all of this. There's a lot of other little numbers in here that are important, but we don't need to go into those because we're not working at a micro level. We're just working at sub level. So look, that's pretty much it, really. We just really need to see this play out here. I'll just recap this a little bit better here. So on the 4-hour chart here, it's possible that we could count this up for wave 1 here, and we pull back for wave 2 here. It's possible, and then we move up here. So this 61.8% retracement level here is important. That comes in at 30.50. So if you were going to short this market from group 2 below, then you really need to pay special attention to that midpoint, that 30.50 there, because it's the 61.8% mark there. If that becomes the resistance, then you know that you can move to the downside. But anyway, just recapitulating this here as an A wave here, a B wave here, 1, 2, 3, 4, 5 here for the C wave here. That would play out reasonably well for this thing here. And of course, the other count is the bearish count here, where we have the A wave coming down here, an A, B, C for the A wave here, and the B wave here, and the C wave here. We've traded up here. We've done all the sort of right things. We're taking profit, or we're going to be stopped out up here. We've got that stop further up here now, up in here somewhere. And we just got to see what plays out here. You know, do we get that classic trading levels pattern here as well? So the you know, the arrival, the reaction, and then the A, the B, and the C wave here. So we're going to have to pick this up, you know, and if we get support back here, we can go up that way. Otherwise, after 3 waves here, then you can go short from that point if you can see 3 waves. Because if it's 3 waves, it could be corrective or an uncompleted impulse wave to the downside. So, yeah, look, I don't have any clear answers, unfortunately, today for this, and it may take even another few sessions to play out as well here. But certainly, you know, below 30.50, that we're bearish at that point, and we'll be looking for a move about this length here tacked on to this here. Alrighty, thanks for tuning in. Cheers.